look, if I knew, timing is like the hardest thing in the world to figure out, because if I knew when the parabola would stop, I would, at the top, I would short every dollar I had, right? Like I just, nobody knows that. Naturally, that's why I shorted a very, very, very tiny amount at like 360. And now it's, you know, I should add to it here. But regardless, there's no way to know. I mean, I think those 300 million shares, technically, they would have to be, I'm trying to figure out if they'd have to be registered for them to sell them. And, you know, given this thing just happened, like how, I would think they're tradable, but they may not be. And getting those shares tradable is probably like the technical matter for the bondholders. I should look up who the bondholders were, but the bondholders are, these bonds were trading at 8 cents. You know, bonds trade like stocks too, but they only trade between 0 and 100, or they can trade above 100 cents on the dollar, but typically in that range. And a distressed company is trading at like 70 cents or 60 cents. These were trading at 8 cents. Nobody thought they would get a penny out of these bonds. And somehow, miraculously, Beyond Meat is now, the stock price is risen enough where all the shares, they're absolutely thrilled to dump them. And they still, what's crazy is they still have the debt. So the company gets to live for another 3 years, but they still have to pay this debt off. And there's no obvious way to do that, given like the business still sucks. And I love.
Is anyone coming up on stage here to argue that the business?
I'm looking at the bondholder list. It's very interesting. It's almost all hedge funds, which is pretty funny. And so when they short the stock, they have secured their position. And so they've goaded the company, goaded GOAD, they've forced the company, quite frankly, into giving them 300 million more shares. There were only 60 million shares before. So now they get to dump all those shares today, basically, to people who will hold the bag. And then the bag holders have to wait for like, okay, next quarter, is the business any better? And of course it won't be. This company has been in a decline for so many years that it's hard to imagine, you know, all of a sudden people are going to love their product after years of nobody liking it. The revenue for the company has gone down every year that they've been in existence, which is, you know, I mean, how cringe do you get? Oh wait, I stand corrected. They did have, they peaked in revenue in 2021, and they've been—
Was it $178? Like,
oh, the market cap was crazy.
2021, and one of their executives bit someone's nose off in the garage of a football game.
I totally forgot that. I was also in jail. But the 2021 revenue was the peak, and it's dropped every year since. And I don't think that anybody expects it to change. And they've lost money every year they've existed. So like, you know, maybe this is the time. Maybe they'll finally have a great new product or something. They just certainly can.
They went into Walmart. That was the news today. But I think the argument is, will they just completely go bankrupt and fail and just?
Yeah, I mean, obviously, when a company has $1 billion of debt and no way to service the debt or pay it back, the equity gets wiped out, right? Like the stock, that's what bankruptcy is. No shareholders get a dollar, but they were able to kick that can down the road for 3 years. So we're just going to go through the same thing 3 years from now. But next quarter and the quarter after that, if the revenue doesn't turn around, we'll be back at 10 cents. If the revenue turns around, you know, something might change. But AMC was like a very similar situation where they had a crushing amount of debt as well. And their community was like insanely, you know, kind of strong. But it still didn't change anything. The business was bad. The business kept declining. And it's still, you know, it's basically down 99% since AMC and since the peak. And I made a lot of money shorting AMC. And I think this will be the same thing because the fundamental business is broken. Like when you sell a hamburger for $4 at McDonald's, it costs like 50 cents to make the hamburger. Here, their hamburger is $4, but it costs $4.50 to even make it, which is crazy. I mean, that's a terrible, you know, it's the worst business on planet Earth, basically. So they have to find a way to raise the price or lower the cost of their insane product, but like they'll just be back out of business soon. Now, in terms of squeezes and stuff like that, you know, I shorted like 20 basis points of my portfolio. So like, you know, I hope it goes up to like 5 or 10 or something. It'd be awesome because then I could short a lot and make a lot of money. Like AMC, a lot of short sellers, people don't understand, they like it when the stock goes up because they can put more money to work And inevitably, this is a zero, just like AMC. But, you know, it'll just be a matter of time. And to your point, I mean, nobody knows when the show ends. I think usually like a quarter, like their Q3 results and their Q4 results, which will be around in January, like those would be good signs that nothing's changed and shareholders would like give up and there'd be no momentum. Because usually for stocks, they're not like meme coins. Like you need, even meme coins, I'd argue, like you need some kind of news or something to look forward to. Otherwise you're just like, oh, let me find the next stock that's going to go up 5x or 10x or whatever. And what do I care about Beyond Meat when I can jump on the next thing? Like people are selling Quantum to go buy Beyond Meat after they sold Open Door.
I was going to bring up Open. I was like, this will just be like Open.
Yeah.
The reason AMC and GameStop are not is those communities, that was back in the era where it was based off nostalgia. They tried to push BlackBerry and Bed Bath & Beyond.
Yeah, I remember. Yeah. I mean, you can see that like communities are best done for organic, real things. Like the people who try to force an AMC community, they were like, oh, movies and this and that. And it's like, bro, we buy stocks because we want them to go up. That's it. We're not here to make friends. You know, we're not here to hold hands. Like we're just here to, you know, figure out how to make money. And I think that there's a pretty simple answer here. If you're forming a community for a stock, like arguably that's like the best sell signal ever. Because it's like NVIDIA doesn't have a community. It's the biggest company in the world. It's the best stock ever. It's just big funds, mutual funds and hedge funds trying to make money for their underlying, you know, holders, their investors. And like a community sounds like a coping mechanism for like
it is for
a bad investment. Yeah. In 2000, you know, at the bottom, everyone had sworn off the stock market. They're like, this thing is rigged. I'm not making any irrational bets anymore because I don't have any money anymore. And that kind of thing gets everyone despondent. But like in these, I wouldn't call it a squeeze, but in these like rapid rallies, like a buyer squeeze more than a short squeeze, the only person that wins is the company. Because the company's sitting there saying, oh, we get to dilute, we get to, like if I'm Beyond Meat, I would sell 100 million shares tonight and I'd have 400 million in cash. And I'd be like, wow, now I can forestall bankruptcy by 5 years instead of just 3 years. And like the companies love it and the bondholders love it because they're like, oh, free money. This is great. But the stockholders are just like, you know, musical chairs gambling. It's like we can all go do this on, I'm sure, you know, Stake and like Bust a Bit or like Crash on Stake. Like we can all just toss our money in a box and shake it around and pass it around as like, that's basically the financial equivalent of this. And yeah, the guy who got in at 50 cents is feeling like he's a genius, but the person who bought it from me at 480 or whatever is, you know, and inevitably everyone's going to feel like an idiot unless you get out. So I feel like, you know, it's just a gamble, a lottery, a raffle, you know, and if you think that you're winning in a raffle, then, you know, it's really hard to sort of, I do like your style, which is, you know, get in and get out and get your money and go, which honestly, like I oftentimes will buy charts like this. And I hate saying that term because I don't really love looking at charts, but like when Circle IPO'd, I bought a bunch of Circle. I barely knew anything about the company, but I was like, this momentum is so strong. I was just going to buy it. And I was able to buy it and like get $20, $30 a share out of it and just get out. And like, if you can spot situations like that, where you go with your gut feeling and you're like, oh, okay, it's like 80% chance I'm going to make some money. Like I saw that at the close, I started shorting and I saw it like rallying and I was like, oh, this thing's definitely going to go to 5. And, you know, of course, after hours, it went up almost to 5. But like, do you want to make investments that way? I don't think so. Like, as long as you have your trigger finger on the sell button just as fast as you have the trigger finger on the buy button, I say there's nothing wrong with that. That's called trading. But in terms of like, let's see what happens this time next week or this time in a month, you know, that is much more like, okay.
What do you think of a community that then moves on to like have a cult follower mentality of the stock? Because that's what's happened to the Tesla community. It started with like cool products and stuff, and then it became like money, stonks go up, kind of stuff.
I mean, I don't really even understand what you're saying, but like Wall Street manages most of the money in the world, and Wall Street doesn't have any community or cult. It's just investors looking at stocks and deciding whether they like them or don't like them. I think retail can form these communities and cults, but those are lower end investors who don't know what they're doing and will soon lose all their money. And good retail investors just basically have their money in, 401ks and index funds and things like that. And the ones that try to beat Wall Street just get punished. And that's really it. Tesla is owned by some of the biggest, funds in the world. It's not a meme stock or a cult stock. It's just a stock. It has had remarkable growth. The biggest stockholders are firms that look at the stock and they decide that they like it. And, it's really not like some big puzzle. There's Fidelity.
So you wouldn't even take that, you wouldn't even consider that as a signal, like the fact that it has a cult mentality.
No, I mean, you're viewing a small portion of what's actually going on, right? Are you in Fidelity's?
Oh, yeah, sure.
Yeah, so the thing that you're looking at is irrelevant. What's really relevant is, does the guy at Fidelity has a $10 billion position in Tesla? He's basically underweight Tesla, and the T. Rowe Price investor is also kind of neutral weight. So when will these mutual funds say, you know what, I actually want to be long?
News alert: U.S. stocks, Wall Street, and
I like Tesla because right now they're deeply, deeply underweight, and so they're basically bearish. And so when will those guys? Those are the real players, not the guy with 1,000 shares, but the guy with 20 million shares or 50 million shares. Those are the investors that matter, I think. Now again, retail in aggregate, does matter a little bit, but it's really, focusing in on that versus the fundamentals of the company, which is really, at the end of the day, like if Fidelity saw Tesla revenue start to grow and grow rapidly, I'm sure Fidelity would say, I got to buy the stock. But, Tesla's had some weakness lately, and it kind of makes sense that they're like, we don't need to rush into this right now. We have to see if they'll start growing again, or whatever reason they're not fully invested. Fidelity, if they're bullish on a company, they can own 10% of the company, but they've decided on Tesla to own only 1% of the company, which is for them basically like being short. And whatever you see on Twitter is like, don't mistake that for the real world, I'd say. Well, the shorts are the converts. So the converts are thrilled. The new notes is hilarious to me because they basically kept almost all of their debt.
7%, and then they have a special shareholder meeting. I put it on your tweet. They're doing a shareholder meeting on the 19th, and they want to raise the authorized share from 550 million to 3 billion, and they want to reverse all this.
Oh, so that's what they've just dumped on everybody basically in the last.
I don't know.
I'm sure.
Because they got the bonds were trading at
8 cents.
Yeah, negligible, and so they got 230 something shares of the debt that they owned. So they might be letting this rally to sell it and then the max price was 97 cents, depending on when they bought it. There could be some in there that from as low as 30 cents. So they might just be they might be waiting and just capitalize on this. They could.
I think bond hedge funds, they maybe sold everything at 2 or 3. These guys.
You think so?
Oh man, I mean, if I'm sitting at a bond hedge fund and I was sitting on 8 cents for my bond, let alone my.
Right, but you have a rally happening, right? I mean, there's so many ways for them to make money in this. Right?
Immediately sell my stock that I'd immediately sell my stock that I got for free.
Yeah.
And then, possibly short more.
30, right?
Well,
they're probably selling premium. There's so many ways that they're making money off this. It's crazy.
I think the first thing is you just if you bought the bonds for 8 cents, you just made literally a 50x, right? Like a 30x.
Yeah, if they bought it, I'm not sure how many. I don't know how long they were holding.
Yeah.
If they did.
If you did the bond at 100 cents, I think you were okay because you rode the short from $100 to $0. So you're pretty happy about that. And
Absolutely.
And then at the end, you get to pull this switcheroo that gives the company didn't want to file, but they had to address the bond. So they gave the bondholders, 3-4x the shares outstanding, and they still have to pay the bondholders in 3 years.
Cover the short.
Yeah, I mean, but it's funny to me because like there's some guy sitting on his desk at Wall Street that's just like ho hum, like, you know, I got to put this company into bankruptcy.
Yeah.
You know, okay, we found a deal to like really punish this company, and then the stock goes up 10x, and they're like, what? Like how? Yeah, I mean, they did roll those bonds 3 years, so I don't know how many bonds are outstanding in 2027, but I think it's at least like 300 million. So they're not out of the woods yet on the debt. It's just a lot more manageable than the billion they had. You know,
they freed up about 800 million.
yeah, which is, you know, a good start, but you know, they are going to lose around 100 million cash flow, most likely from here on out. I mean, I don't think their business is turning around. I mean, the sales estimates from Wall Street were continued declines into the, you know, only 200 million in revenue range, which, you know, would actually, their losses would increase, I would argue. But I think that's the fundamental thing to understand here is that like negative gross margins is just a bad business. Like there's just nothing, you know, there's nothing here to be excited about other than price go up, which is, you know, as Katie was saying, it's like price go up is cool until it stops and then price go down very fast. Yeah, you can kind of tell by the volume because it's just like, oh, I bought it 350, I sold it 370. Buy back at 410, sold it for 430. Like it's just you dip your toe in to make some quick money. Yeah, I just shorted some. My average is 375 now. It's this had been a profitable short for me years ago. Like this is just such a dog company that's like it's so reliable to short it. Because again, negative gross in terms of size of the portfolio. I think I'm at 1% now, so it would have to go literally 100x for me to be worried about it, which I don't. I don't think Beyond Meat is going to get the market cap of Salesforce anytime soon. In fact, like like I said, I'd be pretty happy because I could short even more. It was at 10 cents, and they were going to cancel the stock, right? They were just going to terminate the stock's listing. Yeah, they reached an 11-hour deal where the bondholders are like, all right, we get to keep our debt and you have to give us 300 million shares, but you still have to pay us back some of the debt. And they were like, okay, better than bankruptcy. And here we are. And we're gonna have the same conversation in
100%.
2 years. You know, usually when something like, this is called a cram-down, usually when a cram-down happens, the stock drops because nobody likes saying, oh, I owned 1 million shares, that was 2% of the company. Now I own 1 million shares. That's 50 basis points of the company because now the bondholders all own all the stock. And guess what they're going to do? They're not equity holders. They're bondholders for a living. So they're going to sell all the stock and we'll be right back to the same market cap except 3x dilution. So pretty ugly. It was almost like a bankruptcy deal. And then they had this expands distribution at Walmart, which is they already have distribution at Walmart and they're still going bankrupt. So I don't know that expanding distribution at Walmart is going to help. And then remember, with a negative gross margin, what's the point of expanding your distribution? It's like you're better off almost not distributing the product. If they could have turned this business around by now, they would have. But I think you just gotta look at what will the quarterly earnings show, right? I mean, if the quarterly earnings get better, then you know they expanded it, you know, effectively. If they don't, you know, we'll return to bankruptcy. But I would point out that when they had 400 or 500 million in revenue, they still were losing money and they still actually had negative gross margin. I feel like, you know, you scale. I mean, the more product you sell, the more profitable it should be, right? Economies of scale, but it's really not clear what their story is there. Yeah, no, I'd be pretty excited if it went to 10. Let's do the math here. So they have no cash now, right? They actually have net debt. So if it went to 10, the market cap would be 4 billion. And if they sold, I don't know, 30 million shares, they would have 300 million in extra in cash, which they'd be burning. So let's say they go crazy, they sell 60 million shares for 600 million in cash. The net cash then would be, just doing the treasury method here, 64 cents a share. So that floor isn't very much. If they sold 200 million shares. You know, what a lot of people don't realize is that that increases the shares outstanding. So it doesn't exactly, you know, get you this great benefit. But if they did that, which would be, you know, shocking if they could even pull it off, but let's say they did it, the new floor is $3, which, or $2.80, which isn't counting for the fact that, you know, they would be losing that money every quarter, kind of like AMC or anything else. And then, you know, we'd be back to where we started, and I'd increase my short to 10, and, you know, we'd be back to like trading below cash where it was before. So I don't think that really concerns me too much, as long as the business doesn't improve. You know, if the business improves, then all bets are off. It all depends. Like, you have to feel out the stock a little bit. Like, it doesn't feel like it's going to go to 10, so I might increase my short a little bit, but I have room. I have like I said, a 1% position now, and my average price is $3.95. I started at $3.60. And so just real quick, the Beyond Meat said that they were in 800 stores before. So getting to 2,400 is I don't think very useful. And then they previously said, it's so weird. They previously said in 2020 that they were going to go to 2,400 stores. So I'm not really sure. 2,400 Walmarts. So this is like news from 5 years ago. I just pasted it. Yeah, I mean, it's just finance 101, right? There's a trade-off. If you buy puts, you have to pay implied volatility, and you have to obviously get the timing right. When you short the stock, you don't have any of those concerns. Yeah. So that's the trade-off. You know, you got two choices. There's no arbitrage. There's no arbitrage between them. If one of them was better than the other, it would price the right way so that it wasn't better. Yeah, all those trade-offs are kind of like in the price. Yeah, I mean, generally, yeah, because, you know, the implied vol is usually just too expensive, and selling vol is kind of the better move most of the time. And just shorting the stock is great. I mean, you can keep shorting it until it sort of has a peak. Obviously, if it never peaks, you're in trouble, depending on how big you got in the position. But, you know, GameStop was kind of I wouldn't say once in a lifetime, because it's happened before, but once every like 20, 30 years, you know, these things happen, and you could get into some really bad luck. But it's funny because even Melvin was surviving the GameStop trade. They were going to raise more money and kind of you know, they would have been able to survive it. It's just they decided not to. So he had money from Citadel and 0.72 to keep in the trade. And obviously the trade would have worked if he shorted more at, you know, even at $50, he could have saved his trade. Forget 100 or 200 or 400, where it sort of flamed out within minutes. So, you know, shorting is not, I don't think most people understand it. I mean, one of the other things you could do in a short is you can increase your short as it drops, you know, which is what I've been doing in quantum. Quantum stocks have dropped, you know, around 30%. And if you have a 10% position and it drops 30%, you have a 7% position now. So you can increase it again to 10%. And if it drops another 30%, you can kind of keep increasing it. Obviously, at some point, there's no more meat on the bones. But, you know, that's why people like me kind of get excited when the stock goes up on a short, because at some point, it's going to stop going up. And whatever that point is, as it drops, especially if there's no business model, you can just kind of ride the short down by pressing it more and more and more. So, you know, the onus now, like I started at 360, so I have no I have no skin in this fight, you know, and I increased, and now I'm at 390 as an average. So for me, it's kind of disappointing, because like I would much rather it be at 6 or 7 than I can get a 5% position on. And then as it dropped, I can increase that position to stay at 5%, because this business isn't getting any better. The onus then shifts from the short to the long. The long has to prove it's worth $4. And it's really hard to do with negative gross margins. And again, this Walmart thing, they actually said this 5 years ago. So it's not really clear that, you know, they're actually expanding to anything, you know, because in 2020, they said the same thing, that they would expand to 5,000 Walmarts and Kroger's. In 2022, they said that. You can just ask ChatGPT. And ChatGPT will find you the old statements. So this new statement, I think they just throw this out there every time they they need the stock to go up. It's like, we're expanding our relationship with Walmart. Well, you know, you've been expanding it for 5 years now and your revenue's done nothing but drop and the gross margins are so awful.